Robschild, no investment advice. Welcome to the show where we view the financial markets using Benjamin Graham's investment philosophy, macro technicals, and a touch of crystal ball gazing. Today is Tuesday, June 10th, 2025. Today's episode begins with our headline, Complacency High. Charts coiling. Will China-US trade talks be the spark? While it's easy to get distracted by things like what's going on in Los Angeles at the moment, there's a bigger thing going on for us that follow financial markets, which is the trade deal between the US and China. As of this recording, there is still no updates. And with credit spreads, junk bond credit spreads looking like we are hitting multi-month tightness that we haven't seen since the beginning of March, tells me that markets are getting more complacent than anything. We're kind of looking for a breakdown to the downside here. After all, junk bond credit spreads can't just go to zero and negative. No one would ever lend money to their neighbor for a lower payment than what they can get from lending to the US government, which is guaranteed. So we are literally like hitting our heads on the ceiling of how tight credit spreads can get. We're very close to that ultra tight zone. When, and not if, but when this reverses to the downside, it's going to strip the legs from underneath the markets, in my estimation. I'm now onto the part of the headline, charts coiling. I'm mostly referring to DXY. This is the dollar index, just getting in a very, very tight range here. Whenever anything gets tighter and tighter, it sort of is preparing itself for a larger move. So the dollar and copper. Dr. Copper with a PhD in economics. I noticed that since this pivot low, in the April low, we've connected numerous times on this line right here, and we've also been bumping our heads up on this line here, and it's just looking like it's getting tighter and tighter in this wedge. Where will it break out? Are we prepared for everything to be just absolutely fantastic and the economy is just going to be booming and everything's going to be great and copper can go higher and higher along with CPI? Are we headed into one of these scenarios where inflation is going up and everybody is, doing so great, or not? My crystal ball says probably not so much. Again, read through my website. It's in the description to explain my macro views, daily reminders, to see my full viewpoint on what I think is coming. Spoiler alert, it's not good. But as always, remember, I am just a guy with a crystal ball. Next, community topics. What moves, if any, did you make today? Robschild sits on hands. I did briefly go into Smuckers today off of the 15% drop just based on its PE ratio and its average earnings, but I jumped right back out once I took a look at the balance sheet, so it turned into a quick little scalp. What did you do today? Comment below. Coming up tomorrow, Wednesday, we have CPI. We also have Thursday, the PPI. These are both inflation gauges, the consumer side and the producer side. We also have jobless claims, which at this point I am seeing in my crystal ball that it's going to be bad. But remember, it's just a crystal ball reading. We also have on Thursday a 30-year bond auction that some investors are nervous about, and I'm actually excited about. I think that this one's going to go stronger than other people think. But guys, again, I'm just a guy with a crystal ball. The trade talks right now in the UK, it looks like they may continue. I mean, right now it's pretty late there, so I guess it continues tomorrow. I thought they were supposed to finish up today. Maybe we will get news tonight somehow, but it looks like we're not getting news at least until tomorrow or sometime later this week for now. And then federal budget updates, we still don't have that completely resolved. As always, thank you for watching, subscribing, commenting, and supporting. The subscription is the black box over here with stars on it. You put your mouse over it and then you click subscribe. All your support is greatly appreciated. I'm almost to 1,000 subscribers. No changes to the daily reminders macro views. No changes to the crystal ball readings or the Robschild portfolio. On to charts. I mentioned yesterday the S&P 500 looks like it does have some more room to rise still, and it did today. We went up another 0.5%. The two things that may change this trend of the S&P 500 rising is the results of these trade agreements between the US and China. And then the other biggest one actually this week for me is still initial jobless claims. That's the one that we get week to week. We get to see how many people filed for unemployment last week, how many people are continuing to file for unemployment. That's been rising suspiciously higher and higher. If it continues to climb higher and higher, the end is very clearly near. Winter is coming. And that's on Thursday, so we may not get anything. I mean, it's been a boring week, to be honest. Today's kind of boring. Tomorrow's probably going to be sort of boring. Thursday. Look out Thursday. Next, TLT, my favorite place to be. I just want to note again that this area that we have been fighting in is the gap fill area from January of 2025, where we went down to the lowest low that we had seen in a while and then gapped up. And coincidentally, it's the same gap up that we saw in October of 2023. We went down, we fought down here, and then we gapped up. Whenever you have a gap, the market kind of itches to get back down there and have a fight. And it's certainly exactly what's been going on, just up and down in this channel. It's amazing how charts end up working out that way. I had a commenter bring up that we are no longer in a inverse head and shoulders top. The last time I talked about this, I didn't draw it very clearly. This yellow line here, let's make that a little more clear. So what I mean is that we may have this end up being the right shoulder here. So left shoulder, head. Now, before I had the head neckline go to this point, but instead now the head being here. So that's where we have the potential head and shoulders playing out inversely. But all in all, not really doing anything, just bouncing up and down within this range until we decide where we're going to go next with yields. The thing that could drive yields higher and TLT down lower is, let's say CPI and PPI are hotter than expected and initial claims comes off, cool as a cucumber. Yeah, yields will probably go up. TLT will probably go down. I don't think that's going to happen. I think it's going to be the opposite. But remember, again, I'm just a guy with the crystal ball. Sorry for the so many repetitions of the crystal ball. It's just there's not a lot to talk about today. There's not a whole lot of interesting things. I was sitting on the edge of my seat, waiting for updates on this China and U.S. trade negotiation info to come out. I thought they said it was supposed to. Anyway, I'm just repeating myself because there's really not a whole lot to talk about. The next thing, though, I can bring up is EWZ Brazilian ETF. I just noticed a little pattern here. We've been sort of bumping our heads on this trend line. We finally broke out of it today, and now we closed sitting right on it. It's a little bit of a diamond pattern, which actually can signal a reversal to the downside, but we broke out to the upside, so it looks bullish to me. Again, if you haven't been following the show, this fund itself pays something like a 7% dividend, and it's sort of like the S&P 500 of Brazil. Imagine imagine the S&P 500 paying out a 7% dividend. It's like impossibly cheap for a whole index of stocks. But so, and I'm highly invested in Brazil. I have a lot of BRZU, actually, a highly leveraged form of EWZ. And it's looking bullish right now. I wanted to bring up IWM. I've been bringing up this ETF a lot lately. It's the Russell 2000, only because I was wondering, are we going to break above this 209 level and confirm above it and stay above it? And yes, we are. But I'm going to note that these little candles here are not super strong, solid, big green candles with high volume or anything like that. It's kind of like little puffs of smoke. Is kind of the way it looks, and I don't trust it I don't trust it at all. To my eye, it looks like we're going to head straight back down. But again, lots of crystal ball ratings here today because there's just not anything else to talk about. We're still in greed mode. That was one other thing I wanted to bring up today. The CNN business, with the S&P 500 kind of mostly going sideways, floating up a little bit. I was curious, like, aren't we like sort of getting more neutral? According to this metric, we're still in greed mode. We'll see how long that lasts. Last chart of the day, just another reminder, the 10-year minus 3-month treasury is basically at zero. It's at 0.05% here. When we scroll out to the max, when you get an inverted yield curve, it means the Fed is strangling the economy. The shorter rates, if you lend to the government for a shorter period of time, they give you a higher pay for it because they're trying to slow down the economy. And when they do that every time, once they're done with that part of the cycle, you go into a recession every time. We just had the deepest, longest version of this pretty much ever, and we're still at zero, signaling to me that the Fed is still acting as like it's still holding the economy down. It's holding, sorry to be graphic here, it's holding its head underwater still, is really the way that I see it here. I don't see the Federal Reserve, being friendly the economy, being a friendly risk assets, and yet risk assets are continuing to just be so resilient here. It's quite amazing. Again, I don't think it's going to last long at all. I don't think it's going to last another week, but that's just me and my crystal ball. And that's all from me and my crystal ball. I hope you enjoyed. Thank you for watching and see you next time. Robschild.